Okay, legends, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are doing a comprehensive short-term and macro analysis discussing absolutely everything from the key levels, the next potential moves, overall short-term price action and volatility, and of course the recent economic news, particularly the Federal Reserve interest rate decision. We are going to be diving deep into our macro and short-term charts, leaving no stone unturned. By the end of today's video, you will have a detailed and well-rounded understanding of what to expect and of course what is currently happening. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw technical analysis. If that is the kind of content you're interested in, you can join us on Telegram. The first link in the description below. You'll get access to our charts, our updates, analysis, educational posts, news events, and everything you need to stay in the loop with cryptocurrency and the relevant economic news. And if you're interested in joining our Inside VIP community, you can do that by clicking the pinned comment of the free channel. To find out more information, go ahead and contact this admin. Check out our historical track record, check out a video showing you inside the VIP, and of course the terms and conditions. We'll love to have you in there. We have over 700 members and have been operating for 50 plus months. Check it out. We'll see you in there. Let's jump into the content. So taking a look at Bitcoin, overall on the short term, we haven't really seen all that much volatility over the past 24 hours, even in light of the interest rate decision. And that is mainly because, number one, the interest rate decision came out on par with expectations. And number two, we are sitting at a critical level of short-term support, which is just above that $103,000 level. We'll discuss that in more detail in today's video. Of course, moving over to the overall market data, we can see here with volume and liquidations, overall volume for the last 24 hours have gone ahead and dropped 17% at 240 billion, and liquidations dropping to 220 million. This is down 36% for 24 hours. So a pretty big reduction here in overall volume and volatility. So 143 million coming from longs and 77 million short liquidations coming from the shorts. Of course, there is some news in regards to the global conflicts potentially being escalated or even de-escalated. I think the market is also sitting and waiting in anticipation to see whether or not these conflicts escalate or whether or not they get de-escalated. Of course, this could result in a reduction in overall market volume as the risk of volatility begins to increase. So that is also something to consider as to why we've seen reductions in intra-week volatility during the weekly opens over here. Moving over into the recent economic news, guys, we do have, of course, the interest rate data. The interest rate data was projected to be around 96.7% for a pause. We did see that. So we saw interest rate pause for the overall decision, which was as expected, so the market had already priced that in. The big thing was that the Federal Reserve revised the median rate forecasts, particularly the long term, looking at the end of 2026 and then the 2027 upwards. So we're looking from 3.1 to 3.4 and from 3.4 to 3.6. So this slight increase in long-term median rates signals, number one, they are more uncertain about the future economic development, so they're not preparing maybe to drop interest rates sooner than expected. They're potentially expecting higher productivity. They're potentially expecting inflationary pressures to persist. They're potentially expecting stronger economic growth. The list goes on and on and on. But overall, what this really signifies is it signifies that the uncertainty that they've been developing now for the last couple months is actually coming into play a little bit more. They're starting to make some long-term forecast adjustments based on, I guess, the delay in the reduction of these interest rates. So this isn't a good sign. This is actually the first step towards what we would say a bearish sign over here, potentially a narrative shift to less interest rate reductions or later interest rate reductions, this is not a fantastic sign to see in the market. So essentially, I think of it like a contingency plan, right? They're saying now, well ahead of time, that they may see interest rates be higher at a later period than what would previously be expected to be lower at a later period as a consequence of earlier and potentially more aggressive interest rate reductions. So not a fantastic bit of news. I don't think the market has really taken the extent of that news yet. I think it is, again, so far down in the future, a lot can really change. It is still very speculative, but overall, it isn't a good piece of information we've got from the Federal Reserve. Moving on. Taking a look at the DXY has jumped up a little bit. Again, that is expected as we see this generally slightly bearish news from the Federal Reserve. Again, when we see future median rate forecasts go up, this can strengthen the dollar. So we've seen the DXY push up just a little bit. Anyway, guys, that is it for the broader market updates. Let's go ahead and jump to the S&P 500, and then we'll jump into Bitcoin. So S&P 500 not really moving too much. We've talked already about the key levels here on the S&P 500. The main one we are watching is sort of momentum here to flip positive. We have had this extended bearish divergence develop over the course of the last, let's say, 4 weeks over here. And we do want to see that RSI break upwards. If we see the RSI break upwards, we are definitely going to be pushing into new all-time highs here. Until we see that, we could at best continue to grind with bearish momentum into the resistance. But if we do that, the potential for rejection increases if we remain underneath that RSI trend line. So at the moment, we are seeing an exhaustion rally upwards into potential resistance. Again, not looking fantastic. Overall, we do want to see this little break to act as our trigger for our next leg up. Let's go ahead, guys, and jump into Bitcoin. Before we jump into Bitcoin, make sure to go ahead and sign up to BitGet, BitUnix, or BingX, the exchange links down below. You can also find those exchange links in the pinned comment of the Telegram channel. You'll get access to, of course, an exclusive sign-up bonus on all of these exchanges. You'll get access to 15% trading fee discounts, and of course, you'll be supporting channels. You'll be supporting this channel, and you'll be trading on exchanges I trust. So go ahead, support me, and support yourself with all those bonuses. Trade on an exchange I use and I trust. We'll play a quick ad, and we'll jump back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and get right back into it. So by far and large, the most important chart at the moment for Bitcoin is going to be its weekly chart. Now, we've talked a lot about the weekly chart, and we're going to go over it again because it is just so important. Not only from a historical price action perspective, not only from a technical perspective, but from a structural perspective as well. We have so many critical levels which we are currently sitting above and currently below. And this is one of the main reasons why we've seen such a large degree of indecision. Now, not only from price action perspective, but if we look at, developing economic policy, if we look at the current global conflicts, this all goes to play into it, right? All of this shapes people's decisions, and people's decisions are directly reflected in the price chart. Everyone has a varying degree of influence on the market. When you place a spot order, you're essentially bidding the market upwards. You're what some people would say, manipulating the market in an upward direction to some degree of influence based on your overall exposure to the market or capital investment. So the market is just a collective sum of everyone's decisions over a period of time. The market is incredibly efficient. It's exactly where it should be at any particular moment in time. Any inefficiencies are very often and very quickly caught up in the market, right? So when we look at the price action here, The price action is sitting between two critical levels. The weekly range high, which is going to be this level over here, the weekly range high at 104,400, and our horizontal resistance at 106, and most importantly, the prior weekly high at 108, 109,000. At the moment, over the last few weeks, we've seen a lot of uncertainty around economic conflicts, which has resulted in a lot of indecision in the price. The price is unwilling to move. That is why we're seeing two doji candles. The two doji candles, however, have closed above the weekly range high, indicating an unwillingness to move lower, and below the 106.4 level, which we know is the trigger for a continuation back to the weekly high, thus an unwillingness to move upward. At the moment, this is what we would consider to be overall exhaustion. When we see indecision after large rallies toward the upside, we have to take that as face value. Essentially, we've seen a large amount of bullish momentum and buyers step in, and now we are seeing sideways consolidation and a decrease in volatility, which is an indication that number one, the buyers that have been pushing the price upwards have either dropped off or left, meaning they're decreasing the amount of purchasing, or we have profit taking and sellers step in to push the price down. Either way, we are seeing a shift over here in the overall narrative of the price action, the direction of the price action from an aggressive uptrend into sideways consolidation. The question is, will this consolidation be absorbed? Will the selling pressure be absorbed, facilitating a continuation, or are we going to see the buyers be unable to sustain these weekly highs and result in the sellers taking full control of the price action? And that is something we're going to answer when we jump into the short-term charts. But from a weekly perspective, we need to discuss the consequences of these moves. So first and foremost, we have a few different patterns we want to show you. At the moment, what we have over here is we have a breakout of the range high post positive momentum shift on the weekly. So the positive momentum shift is this RSI breakout, positive momentum shift, bouncing from the 50 EMA, resulting in a continuation through the prior range high, okay? If we show you prior examples of that, such as the consolidation, the 8-month consolidation back in 2024, we had, again, the positive momentum shift on the RSI, okay? Post 50 EMA retest. Look, it happened at that 50 EMA retest. Thus, then we saw a continuation through the range high. So exactly the same pattern. If we look at the one prior to that, this is going to be again within the same bull market we've been in. We had the breakout of the RSI trend line. We had again the retest of the 50 EMA, then a break through the range high. So we've seen two instances here on this weekly chart over the course of the last 2 years where we've had the same pattern. We've had a consolidation, an expansion, absorption, and then a continuation. What we've seen here is consolidation. Where was it? Consolidation, expansion, absorption, and then a continuation. What we're sitting at the moment is the continuation is beginning to exhaust, and that could be as a consequence to the global political events or a whole variety of other things. But what we have said, and we said this many, many weeks ago around the 19th of May when we hit that $110,000 mark, we've had the risk of developing this bearish divergence the entire time. So we had the breakout of that range high, but the RSI didn't. The RSI created that higher low, indicating that although we have seen the continuation upwards, the buyers are running out of steam here. So we need to consolidate sideways and absorb the selling pressure to continue upwards again, or we need to see a correction back into demand. If we're looking at another pattern, we have the 2021 top pattern. Now, I'm not showing you this pattern to tell you we are at a macro top. I'm showing you this pattern because it is a deviation setup. For example, we have consolidation, expansion, compression, absorption, continuation through prior weekly highs with the bearish divergence. We have the breakdown of the weekly high, confirming deviation, which results in a continuation downward into demand. So that is another setup we are at risk of developing. So if we look at the current price action, we have that potential setup developing over here if we were to lose that low. Now we'll discuss on the short term what it will take for that deviation setup to continue and result in a correction, or what it would take for the price action to push up again. Because both of these scenarios, whether it be an upward continuation or a downward continuation, are plausible while we remain above the weekly high. If we were to bet on what is more likely, I would say at the moment, while we are sitting above the 62.09, we have to consider support to be support until it is not, but that doesn't necessarily mean we are going to break through these weekly ranges. We are in a neutral consolidation with a large degree of indecision as proven by the two last weekly candles. So let's talk about now the weekly potential moves. There is one very, very large risk to this chart, and that is going to be the 62.09. As you know, I've been talking about the 62.09 for like 3 years on this channel. It's a very important weekly level we've identified ourselves. I never see anyone else talking about it, mainly because number one, I don't think people respect that is a level of significance. And number two, I just don't think we'll use the RSI and the way we use the RSI. So the 62.09 historically has been a significant level. Every single time we have seen a break upward, okay, or a break downwards from the 62.09, we can look just up until, where is this? June 2024. From June 2024, we've had 4 occasions with upward and downward breaks. If we look at those 4 occasions, we saw a 20% pullback. We saw a rally of 30%. We saw here a pullback of 23%, and of course, in this most recent one, the breakout, we saw a rally of 16%. So we see large moves on the weekly when we break through this level. And what do we see at the moment is we are sitting just above the 62.09, which means we run the risk of a correction underneath, resulting in a large move toward the downside. What kind of move will we see? Well, moving over to the weekly chart, we've gone ahead and mapped out all of the last momentum shifts here on the weekly since 2019. 8 out of the 9 times we've seen weekly RSI breakdowns, we've had corrections of 10% or greater. So assuming a 10% correction or greater from the weekly range high, that could take us perfectly into the next level of support. So taking a look over here, right over here, this is a level of support right over here at 94,000. It brings us down there absolutely perfectly. The good thing about this, if we do see that develop, we will be sitting above the 50 EMA, and we will be sitting above the Gaussian channel upper band, because we know the Gaussian channel upper band and the 50 EMA are the levels we have been sitting above ever since the bull run began. Okay, the bull run began over here above 31,000. That is when we saw talks for interest rate reductions in the future. That is really when we saw ETFs begin to be talked about for approval. That is when the bull run began, right over here. And we've been above the Gaussian channel and the 50 EMA ever since. So we do not want to see a loss of that, but if we lose that level, then I do believe we are in a bear market and we'll see corrections to the 200 moving average. So even if we see a correction here, we need to contextualize what that correction would mean and what it would look like. I believe worst case scenario, it could take us to 94,000, which in the macro sense would still be relatively okay. Okay, so that is going to be the weekly chart, worst case scenario. Best case scenario, we avoid all of this, and to avoid all of that, we need to close a weekly above the weekly range high, and then we move through 106.4 and hopefully into new highs. So let's talk about that scenario now. So going into short term, this is the chart that's going to determine everything, guys. Now, I mentioned 103,000. Now, there's no line over here on 130,000, but I'm going to go ahead and draw 103,000 in, which is right over here. Now, the 103,000 level, although doesn't seem too significant at the moment, it is a pretty important level because if we look at 103,000 from a volume perspective, below 103,000, we're starting to see this low historical resistance range really begin to take off. And that is why we're seeing a lot of stagnation around here on the weekly. And even on the short term, we've seen, what, one flash correction under 103,000 since the 31st of May, and that flash correction resulted in a pretty large drop into 100k. So 103,000 is acting as that bearish trigger for what I'd assume to be a larger correction into that $90,000 region, to the $100,000 region. So we need to hold above there. Now, alternatively, for the bullish perspective, we need to start breaking above 106.4, which is going to be that weekly level of resistance, that orange line in the weekly. Above 106.4, we facilitate moves back to 110, okay? And for us to be bullish again, we need to see a break above 110,000. So we were to go ahead and give an overarching narrative to what the price action is. The macro price action, and we're talking about macro price action, not talking about expectations or direction. It is bullish above the Gaussian channel upper band. If we're talking about how the price action is developing now, we are macro bullish, but we are seeing short-term weekly exhaustion. That sort of short-term weekly exhaustion can go two ways. We can absorb that exhaustion and then see a continuation upwards, or the exhaustion could take over and push the price action downwards. Whatever happens from how this exhaustion develops will then spill back and impact the overall direction of the macro trend. Okay, so although we are macro bullish above here, the exhaustion on the short term is not bullish. This is a neutral pattern. So if we're looking for the next leg up to be bullish or the next leg down to be bearish, we need to break the upper trigger or the lower trigger point. Until then, What are we doing? We are in a horizontal consolidation. We are in a chop zone. In chop zones, we see a lot of liquidations, we see a lot of volatility, we see a lot of sporadic price action, we see a lot of external events begin to impact the price action. The reason why we see those things happen at the same time is because it's like what came first, the chicken or the egg kind of scenario. We are seeing this horizontal consolidation as a consequence of these external events impacting people's emotions enough to influence their decisions into a point of indecision. And then as a consequence of that developing into a sideways consolidation, we are also seeing those external events develop even further. Because if these external events were not causing indecision, we wouldn't see this consolidation, because the price action is efficient enough to continue in the direction of which it should be continuing at any particular moment in time. That is it. That's like a mic drop moment right there, okay? So the market is doing exactly what it should be doing based on its external influences. Market manipulation, all this stuff, it doesn't exist the way people think it does, okay? No one is sitting there controlling the market. Maybe the Federal Reserve, maybe you can make an argument the Federal Reserve is, okay? But these BlackRock or, these hedge funds, they're all trying to impose their own personal wishes onto the market at any particular time, just as you do when you purchase an altcoin. You spot buy it. You're trying to influence the price up, just like you do when you buy Bitcoin. You're saying that I believe this asset is worth this price, and that is why I'm purchasing, and hoping the market reciprocates that and other people believe it is worth more to push it up higher. Everyone is trying to impose their influence on the market in some degree through their own actions or even their inactions. So the market isn't manipulated because it's moving sideways. It's doing exactly what it should be doing based on the context of which the price is developing at this particular moment in time. So what does that mean for you? It means you should be waiting and seeing. You should be watching the charts, developing plans, understanding what is happening, and being able to react when the time is right. And then also understanding why this is happening and then how to react to this. This isn't a time to be taking massive swing longs and hoping for these continuations upwards. We'll get the time for that when we get confirmation. This is a time to get in and out of the market, scalp trading it, taking your wins, cutting your losses, taking your profits, being aggressive with risk tolerance, etc. But again, how you want to trade is entirely up to you. I'm not telling you what to do. This is just what I do and my personal opinion. So I hope you enjoyed today's video, guys. I will leave it with one more point. The total cryptocurrency market cap, as we talked about before, is at a very important level, the 50 EMA, okay? Now, we've already said Bitcoin is at 103, retesting that range low. And I've said already at the start of the video, although, this is looking pretty weak, support is support until it's not. So, with the total cryptocurrency market cap at support, with Bitcoin coming into 103,000 at support, there is a pretty good chance we bounce back up to 106 over here, 106.4 to retest on the short term. Because if we go any lower here, we do run the risk of a pretty steep correction for the broader cryptocurrency market. So even though on the weekly we're pretty far away from this trigger, we're getting very close to a trigger on the short term which could influence that. So pay attention. I think the next few days will be pretty important. I think by next week, hopefully, we see a more definitive move. And if I look at the weekly chart for what it is over here, we really can't just be printing another doji candle. I think we're going to see some reaction here on the RSI in the next 4 days. I'd be honestly gobsmacked if we see a third doji candle in a row. It'd be unprecedented in comparison to what we've seen historically. And that doesn't mean it won't happen, right? Things happen over time that haven't happened before, but it would be very, very rare to see. So thanks for tuning in, guys. Have a fantastic day. Catch you all in the next one. I'll see you then tomorrow. Bye.